Hello and welcome back to CMG Forest Space Forest Lecture. This is a new year. In fact, this video is being recorded on 1st January 2024. This is our first video in this year, and this video is basically on weekly market analysis, right? Weekly forex market analysis. So what we are going to do in this video series is that every week we are going to do a market analysis, in fact, a top-down analysis, and present it to you so that in the course of the week, you have a general overview of what is going to happen in the market, right? This is, for the disclaimer aspect of this, this is what, a forecast, right? A forecast for the first week in the year, right? The first week in the year 2024. So what we are going to do is going to do a top-down analysis, and then we know what is going to happen in the course of the year, in the week, sorry, the course of the week. So it's just a foresight. For the disclaimer aspect, it's a foresight, right? We are not going to be held responsible for in the case where the market doesn't go in the way that we anticipated, right? But we are just going to give you a foresight. So we do this with what? A proper risk management. So that is it. And welcome back again. And I'll use this opportunity to wish you Merry Christmas and in fact, Happy New Year. We pray that this new year is going to be a prosperous, a peaceful, and then self-providing year, right? We are just going to rely on God and keep our fingers crossed. So that's what we're going to do. And then when it comes to the aspect of forex, we are going to take things to another level, right? Another level, learning, doing more analysis, and then if any suggestion that you have, you don't watch, draw attention and then write back to us. So now, this market analysis is basically going to be done on DXY. Now, another name for DXY is what? The USA dollar, right? Now, at CMG, the analysis that I will normally do is on intensively or massively on what? DXY, the dollar, right? That is what I do. And then we'll sometimes have a look at gold, right? Now, the reason why my main focus is on DXY is that the pairs that I trade are USD pairs, right? Let's say XS, X/USD. So these are the pairs that I'm going to I trade. So if you trade any pairs that involve the USD dollar, then I think this is the right material for you, right? So gold is also part, the pounds USD, and then Euro USD. These are the pairs that I trade. And then sometimes I trade the US oil. You understand? So this is what I do. So if you don't trade any of these pairs, then I think this will not be appropriate for you. But better still, you can make a request. Then you can study that pair and then do analysis on that for you. But this is the pair that I trade. So if you're an amateur, we started with the beginners class, and then we are moving towards, we have moved to the advanced, right? So this new year, we are going to do more of the technical analysis, doing the advanced, doing the analysis, and then your entry, exit. Whatever we have learned so far in the beginners and intermediate, we are going to actually implement them in the advanced class level. So that is, but this series is going to be on a weekly basis, especially on weekly basis. So that is what we're going to do now. Now, this setup actually, I'm actually already in this trade. You realize that the week, in fact, the forex market trading, the last week actually entered into this new year, right? So that is why we see that I have what? The 43rd week initial, the INI setup means that initial setup. So what it means is that I do a weekly analysis, right? Then as time goes on in the course of the week, sometimes there may be some adjustments, right? The adjustment doesn't really mean the market direction is going to change like we have anticipated from the onset, but just that the trend, how the movement comes about, the up and down, the retracement and the impulsive movement. Sometimes that's the only thing that actually what happens in the course of the week. But the general direction does not change per what our analysis. Notwithstanding, we are not saying that our setup is what 100%. In fact, you and I should know that in forex anything is going to happen, but we deal with what higher probability setup. So that is what we do at CMG. I hope you understand it. So in the course of the last year, 2023, I was able to do the analysis. In fact, so you seeing for the third me that I started 1, 2, 3, 4, 5 years, but some of them I lost count, right? Some of them busy schedule, busy weeks. So I think I didn't trade, I didn't do analysis on them. So that is what we have there. So in a year, we have 52 weeks. So I was able to do 43 weeks in 2003. So that is what it means. And then the last part ended in fact, a week into the what? The new year. So that's why you have this one. So what I'm going to do is, I'm going to just do it 40, in fact, for the third, and then took first January 2004, right? So that's when it's going to happen, right? So that's what it means. It's as simple as this. So that is it. Now, so as already I am already in it. It means that this trade actually, or this setup, I'm already in trades. I'm in what? The pounds trade. I'm in the Euro USD, and I'm in gold, right? And I even on the USD oil, I think I'm in the competition, this preference account. That's the trade that I'm in, right? So this movement, it means that the beginning of the setup or whatever here was the initial point, right? Then we moved to this point, then there was a big consolidation, right? So this rectangular box here means that if price move out of this area, then my setup or my entries will be triggered. So the price moving out of this box initially means that my trades have been triggered, my position have been triggered. So I'm in it. It came back a bit. There was much consolidation. The initial consolidation here was happening here, right? Then it broke out. Then my trade had been triggered. Then it started coming back up and up and down, up and down, up and down. You understand? So this is what is happening here. But at this level, or in fact, last week Friday, the price was able to move out of it, out of the rectangular box. So it means that this setup is actually what? Working. It's in what? It's in play. It's doing work. Right? Now, I want to put everything that we have learned so far into practice. Like, I can actually do only the analysis on 1 hour, but for practice and for standard, I'm going to do what we have learned so far. We do top-down analysis. So the top-down analysis is what? Taking analysis from the higher time frame, and then down to the time frame that you actually want to trade, right? So that is what we mean. So my time frame that I checked for the top-down analysis, I start from the daily time frame, right? The daily time frame, right? The daily time frame. I check what is happening on the daily time frame, right? I check what is happening on the daily time frame, right? So this is what is happening here. Sorry about the horizontal line. It actually indicates my resistance and then support level, right? So it may differ because I actually trade on 1 hour time frame. I don't trade on 4 hour and daily, right? But I use the daily and the weekly or the 4 hour for my analysis, right? For my confidence. So that is why sometimes you see the lines being close to each other. But if I go to the hour, the time frame that I actually trade, you realize that the lines are spaced out correctly, or yes, in a nice position. So that is what it means, right? Now, so for our top-down analysis, what we learn is that we look at the direction from the top down to the time frame that you actually want to trade. You understand? So if market is generally moving downwards, Then in the subsequent or the downwards time frame, we want the market to move in that sense. In actually what finally what decide to choose the direction that the market is going to move, right? So that is it. Now, when you look at this structure, general view, there was an up, right? And then now we are in the down side. Now, we also said that in the down movement, for the market to control moving up or down, we have something called candlestick what pattern formations that need to be formed, right? So we learned about bullish engulfing, the morning star, and then the evening star, right? So now, for me, generally, if you look at it, you tell me that the market is what moving generally down. That's on the daily time frame, right? But if you look at this three candlestick that is happening right now here, I'm expecting what a morning star candlestick to form here. The red, the green one, and then the green one also happening there, right? So the green one, this three candlestick has actually formed, and to me, is what a morning star. A morning star candlestick, right? If you don't know what a morning star candlestick is, please go to the intermediate class and check on the candlestick patterns. The morning star and the evening star, you understand it correctly, right? So on the daily, I'm expecting or I am anticipating that as this morning star has formed, then I'm expecting that the market is going to move up, right? This is what I formed. Now we are expecting there's a small one that is actually forming here. Yeah. You see, a small one that is actually forming here. So the market closed the last day in the year actually. So this is what is happening, and this is daily. You understand? So I'm anticipating and wishing that the market will go up. So in general, it means that I want the market to move up. So that is my what analysis here. Now let's go to the 4-hour time frame and see what is going to happen there. Right? This is the 4-hour time frame, right? So realize that whatever I saw in the daily time frame is actually what a good probability, a nice probability. Now look at what is happening here. Actually, the market is what moving down, right? In that sense, right? Look at what happened here. Look at what happened here, right? This is our support level, right? Price has been what rejected here at this price level, right? This is a support. Price has been rejected here, and then this look at this bullish, a strong bullish forming. Now another confluence is that you see this EMA, like the moving average. This is what actually a 50 moving average, right? This is the 50 moving average indicator, right? The 50 moving average indicator. So that is what I use, right? I don't use any indicator apart from this. I know you may have other mentors or other traders that use a lot of indicators. At CMG, we try to keep things as simple as what? As needed. Now, putting a lot of things on your charts, indicators doesn't mean you are a good trader or you're the best trader. No, it doesn't qualify you to be that. In fact, in this profession, keeping things simple is the best way to actually come out successful in this profession. So that is what I do. That's what I do. I don't make my things, my charts messy, overcrowded, and no. I don't mean to intimidate anybody, right? Because you are amateur, because you are with me starting from the beginner class, and then we are moving with the intermediate. Now we are at an advanced level. You have to try as much as possible to keep things as simple as that. So that is what it means. So it means that now with the confluence, the daily time frame, I told you, we expect the market to move up, right? Looking at the candlestick patterns and the support and the resistance level, the moving average, right? Now here too, this is what is happening. So you see that there's what? There's some adhesion here, right? There's a harmony between the daily time frame and then the 4-hour right time frame, right? So now let's go down to our final time frame where we actually trade, right? So this is the 1-hour time frame, right? This is the 1-hour time frame. So what do you see? You realize that whatever I was saying is actually true, right? So now come here to look at what is happening here. The market is what? It's still in an uptrend, right? Now look at the confluence again. These are support level, right? Price has been rejected here. We move here. Now look at this 50 MA. The 50 MA for me indicates that if prices move, I'll just keep things simple and it works for me perfectly. If price moves above the 50 EMA, it means that then the price I can actually do what? Take my decision, right? So price has moved above the 50 EMA, means that the price is going to keep going up, right? If price moves below, then to me, it's a signal for me that dollar is going to what? Sell. So that is it. Now, let me draw your attention to one thing, right? Now, there's a simple rule here, right? A simple rule here. Let me try and type something out for you so that you understand what is happening, so I don't get confused, right? Now, someone may ask, why am I doing this if I want to trade pounds USD, right? I want to trade Euro USD or gold, right? Why do I have to come back and do this analysis on DXY, right? I told you, like, every pair has two words, currencies in it, the quotes and then the quote currencies and then the other one. You understand? The pairs and then the quote currency, right? So it means that, and me, this is the pair that I trade. So XXXY, XXX means any pair stroke USD, right? That is the meaning to me, right? It's as simple as that. So if you realize Euro USD, Euro comes before what? The dollar. The pounds also comes before the dollar. If you look at gold, the XAU, then the dollar comes. You understand? So this is what it means. So what it means is that in the pair pegging, in currency pegging, there's something like arm wrestling, right? The arm wrestling where two people they wrestle with their arms. One is trying to pull the other one down, right? So in the same way, what it means here is that if dollar, right, USD dollar is moving up, then the other pair will come down. If dollar is becoming strong, it means that the other pair is becoming weak. And it's just vice versa. You understand? So if USD is making strong, then it means that XXY is becoming weak. So if XXY is becoming weak, then it means that I can sell XXX USD. I can sell it. So any pair with this kind of combination, I can sell it. You understand? I hope you get that mean. So it's as simple as that. So simple and short, right? Simple and short. Before you enter a trade or do your analysis, come and check if only you are going to trade the pairs that I'm trading. And it's applicable to any of the pairs with USD in it, right? So what it means is that if USD is going up, the other pair is coming down. If USD is coming down, the other pair is going up. So now, in this sense, if dollar is going up, so what it means is that USD is what? Is selling. I will move to there and you understand what I mean. If dollar, as I said, is going to move up or is moving up with this my setup, then per where I entered or the general overview of that currency pair, like the USD, it means that USD is what? Is selling. It's as simple as that. Now, even if you come here, right, if you look at my watch list, like USD, look on the what? The percentage, right? The prices. You see that the what? They are in red, means they are selling, right? USD is selling, even though it's not all that strong, they are not strong selling. Because if you look at the percentage there, the percentage change is not all that strong, but they are still within my setup. You understand? So USD is what? Selling. Pounds is selling, right? gold. It's not selling. You understand? So now, for me to prove to you, let's enter. Let me click on the UUSD and let's see what is happening there. So now you see what is happening here, right? I have to show you results. There's no reason why, there's no reason or there's no any importance as to why I have to lie to you, right? So you see what is happening here. I told you I'm in the trade already, right? So this is where I entered, right? Look at the trade. This is where I entered. I entered here. This is my entry point. Now you can see the what? The trade is what? In profit. If I should go and show you the actual result in my MetaTrader 4 or 5, I'm in profit. There's in fact, you don't need to see that what is happening there, but this is what is happening. So this is what 1 hour time frame. So the analysis should what in harmony. You can't go and do analysis on 1 hour time frame and go and enter on 4 hour time frame. You'll be at loss, or even if you be in profit, you'll be in loss or you'll be taken out before the market moves in that direction. So the time frame should be in sync. You understand? So that is it. So one thing you should realize is that it means that during my analysis, the weekly analysis, I don't have to waste time. I don't waste much time, right? I just look at the DXY, then I do just a small analysis on the currency pairs that I have to enter. It just only tells me where I should actually put my entry, right, and my exit, my entry, my TP and exit. So that is what I actually come and do on the individual pairs. I don't do much tasking. I don't do much work there, right? It's just a matter of where I have to put my SL, my entry, and my what, my TP. I don't come and do. I do all the work in DXY, right? If I should even move to gold, let's see what is happening on gold, right? Give me a minute. So you see, look at what is happening on gold, right? So, like I said, they're selling. They are in sell all right, and they are not in strong. They are not strong sell, but we will see what will happen, right? So you see, I entered here, right, move down, right, and then it's up again. Now we are here, just below it, right? My entry should have actually come here, right? If I should put into the sell limit, right? I tried the sell limit. In fact, I deleted that setup, right? I did that one. I did this one actually first. Then later, when I realized the market was moving far away from here, then I came back to what, put an entry point here. I just put the long order on it, but I didn't actually enter them on my MT4 or MT5. That is why I didn't even worry myself to leave it there. So I have to delete it. I have to be real. I have to let you understand what is happening, right? So what was happening is later when I realized the price was, this is nothing. Right? So that is it. So later I came back in the course of the day. I came back to put an entry here, and it actually picked it, and it was moving down here. But on my MetaTrader, I didn't enter the trade, right? So it means that this setup was working, and this setup is actually working. But because I did not enter on my MetaTrader, I decided to remove it for my analysis, the weekly analysis. I have to be real with you. So you see what is happening. So you realize that whatever analysis that I'm talking or I did is what actually was true, right? So we are going to still hope that the excuse me. Yeah, sorry. So you realize that whatever the analysis was about is what is actually what true. So we are just hoping that the market will continue to what move up. So in general, what I'm anticipating is that the what DXY should what make strong for this current week, or in fact for even the next week, right? But I won't bring that one up now, right? I'll wait at the end of what the week and then do the other one. So that is the line that I'm doing here. The line shows that I want what try to move up. You can actually move up to this line and then come back a bit and then move up. You understand? This is another resistance level for me, right? And this is my support level, right? So price, I'm expecting at least the price should move to this level. That's 101.800, right? 101.800. That is at least, this is where I think dollar should move up to. Or in a better sense, you can move past it or move down a bit, move to this point, move down a bit, and then move up. That's the general thing. But you can actually move here and then invest actually, right? So if you move at least to this point, at least the setup is correct. My weekly analysis is correct, right? And then move down and then move up or move here and then finally reverse actually. That is it. But for me, I'm expecting a bullish DXY for the week, for the first week, right? So I hope you understand it. So the general idea is that if you are trading DXY or dollar, if the dollar goes up, right, in the pair that you are trading, if the dollar goes up, then the other pair that you actually trade, the pair that you're actually trading, you sell, right? Then if dollar moves down, or mass in dollar is selling, then the other pair you actually want to buy. You understand? So this is as simple as ABC, right? So that is it. So you realize that I didn't even have to waste time doing analysis on the individual pairs, the EURUSD, the pounds, the gold, or maybe even oil, right? So that is it. So it's as simple as that. Now let me draw your attention to one thing. Now, even though there's this general rule of dollar going up and then the other pair selling, but when it comes to gold, gold sometimes can have some exceptions. I have to draw this disclaimer to you. Gold sometimes have exception, right? Sometimes gold DXY will be buying and gold will also be buying. Right? In some cases, it happens. Like we know, to every rule there's an exception, right? So sometimes dollar will be buying, and then still gold will be buying. Dollar will be what? Gold will be buying, and dollar will be buying. Gold will be selling, and dollar will be selling, right? So many a time for me, I don't like to do counter trading, right? So instead of me, even when I see that gold is selling, right, and dollar is also selling, I don't enter such trade, right? I like to, on this per my trading plan, I like to take the same type of trade, right? You understand? I like to take the same type of trade. If buy, I'm going on all of them buy. If I'm selling, I'm going on all of them on selling. Due to my trading style, and then the pair that I trade, the dollar being the dominant currency in that pair. So I hope you understand. So thank you very much for watching this video. Let's see how the market plays out at the end of the week, or in fact, the week after. Thank you very much. Please like and subscribe to our channel. If any problem or any special request that you have for us to do analysis on, you can let us know and then we'll do that for you. Thank you very much, man. Very much. Bye.